Let's stretch and get ready for an amazing show. I will try to not be too distracted by the screens. Let's let's retweet it or
All right.
re-X it.
Yeah, 2 days in a row for Maris and hymns. My heart is full.
Engorged even.
I'm going to stop it right there.
That's a good spot. That's a good spot to stop.
Let's see.
So, Biggs, you should be doing 20-minute kind of fit and interval rides. I see your Peloton back there. You could be getting yourself fit and ready for the road trip you're taking.
I'm trying to get in to see my doc earlier. He basically says, don't do anything for 3 months, which I kind of take as the yeah, that's okay if you're 80, but I'm 60. So, put me in, coach. I'm ready to play. I basically am bad. I've called him every day at 9:00 in the morning for the last 3 days.
Doctors love that.
Well, but I say please and thank you, so it ameliorates my dogged persistence.
There you go. As long as you're polite.
I was raised right, and I'm always great with the nurses and the reception staff because they can kill you, but it's also sincere. They're wonderful people,
and people who shit on them just strategically and sort of emotionally, kind of scumbags. Just kind of a terrible strategy and bad way to go through life.
Yeah, that's a bad place to be. I was raised better.
And also, you're yelling at the one person who can ease your suffering, which is just always a terrible idea.
Yeah, I'm with you. Good to have you back.
What's that? I interrupted you, but Bakes. Sorry.
No, good, Jeff. Good to see you back.
Thank you. It's good to be back, and thank you for all the well wishes over the last week. It's been a tough week.
Yeah, God bless you.
On those cheery notes.
Yeah. Let's see. So today we have PSIL, we have Peloton, and I'll throw on why not some hymns, why not some Merck, some Novo. But we
got Amazon reporting tomorrow. We got Elf. We got all kinds of names that we've talked about in the past, and just kind of huge things coming down the pipe. So it's a busy week.
Yeah, I want to ask you about Walmart and Target just briefly, and about there's something going on about immigration and ICE, and but I'll ask you when we're live. It's a kind of off the wall question, but let's see. Okay, so we are live. Let's make sure we retweet it. We should ease everyone in. Everyone has their coffee, their caffeine or juice of choice. And we are Wall Street Beats. I'm David Maris, Jeff Macke, Kevin Bakes Baker here today for February 5th, which is kind of like the no man's land of winter time, right? There's maybe, I guess we could look forward to Valentine's Day, but really, come on, really.
The worst Super Bowl ever. We got that coming up.
A month. Yeah, you do have the Super Bowl coming up, and of course the Hims Super Bowl commercial, but we'll leave that to later. Today is all about. Today is all about taking trips.
My triple, my winning stock. You want to talk about that? Oh, okay.
Wait, did you say Hims? No. So today's all about taking trips, whether you're stationary or not. We're going to start with Jeff on Peloton. Kevin mentioned that he has a Peloton that's kind of holding some old equipment or something, or a T-shirt. I have a Peloton
that was in confidence.
That was offline. I have a Peloton. It holds a shirt or two, I think. No, it's just used occasionally because I go to Lifetime Fitness, which is LTH. Feel free, long and strong. But Jeff, let's talk about Peloton. And is it a long? Why is it a long? The chart looks like it's kind of gone over a hump here. What's the story with Peloton?
Not a great looking chart. Absolutely not a fantastic looking chart. But you're going to see that this was a $50 billion company briefly, which was obviously dumb. Huge pandemic name and drew every bit of demand forward that they possibly could. They got a nice little pop last year. Towards the end of the year, as some institutions started jumping on board. And the real story here is going to be cost cutting. It's going to be just kind of what Peloton's done over the last year or so is they've cut back expenses and they finally got over that. And it's a recurring theme that I'm looking at, especially with these pandemic names. These companies had to get over the idea that we were going to grow forever. It's the same idea with Stitch Fix, The Real. Some of these names have worked, some of them haven't. But what I'm looking for in these downtrodden names is just a realization on behalf of the company that they are not, in fact, going to grow 30% a year. The stationary bike industry, that's going to be pretty stagnant. That's not something that's taken off. That doesn't mean you can't have a great product. You have almost 3 million subs. That number is declining slightly, but in return for it declining slightly, they're not spending nearly as much as they were on marketing. The cost of their bikes is going down because they're stacked in inventory. It's obviously kind of a little bit of a three-legged dog story, but that's what you would expect for a company that now is trading for an enterprise value of 2.75 billion versus the prior mentioned 50 billion with some debt issues. But they're not going out of business. They've got very sticky users. You guys are both Peloton subscribers who, you own them. You just say you don't use them. I use mine all the time. I'm not sure if it's a confessional that you don't use them or an argument against the stock, but it's pretty sticky. And they're able to translate those subs into cash flow. That's been the real change here, is they're going to flow cash this year for the first time pretty much in quite a while. That makes a huge difference. That gives them a lot of slack, a really sticky user base. They still have opportunities, like 2/3, give or take, of their audience is women. I like what they're doing with the JJ and TJ Watt advertisements. I think that's going to be enough to kind of stabilize growth. They report tomorrow. We get to hear from the new CEO. Now, this is going to be a big moment for him. He's really got to present both the narrative and the financials. David, we were talking offline about sort of how, you can't just go by the narrative. But then again, if I'm hearing from a new CEO for the first time, I want a story from the guy. I want him to tell me how he's going to continue cutting costs. This is a company that is spending $300-400 million a year on R&D. They make an app and stationary bikes, which, seems to me they can cut some expenses there. Seems to me they don't need retail stores. They don't need a lot of stuff. And once you have a cash flow story, you end up with a situation where private or public, it's going to be undervalued if they can continue to execute and not fall into those traps where they're trying to stuff a Peloton into every house. And that's where they are now. And again, so the numbers I'm looking at there are going to be, what's the churn look like? What do the new sales look like? How much are they spending on those? And, if they're able to just kind of cut expenses. They announced a plan last May it was, to cut out about $200 million. That's a super low number. I think they could up that to $300 million total in expense savings. And again, that just trickles right to the bottom line. So, a turnaround story, going to be bumpy, but I continue to be long. I've been long it since kind of the fives. Not super worried. It's more of a binary bet. This is either going to work, in which case you probably get it taken out at 15 in a year or two, or it's not going to work. I'm an idiot, and you just kind of admit defeat at $2 a share, $3 a share. I'm fine with that risk reward, barring something sort of really unexpected, really catastrophic tomorrow. And I'm talking about, we've decided to buy aerobic studios type of tragic. Anything that's kind of, we're gonna do jazzercise. We're expanding into that area. What I want to hear from them is we're just going to sell a lot of really expensive bikes to really loyal customers and continue to kind of stream our product at a nice profit. Now, it's a hugely profitable offering that they can get into. That they're still mopping up a little bit. That gives you some meat on the bone in terms of upside surprises. So relatively cheap for what they're doing. Pretty good story. One of just a baker's dozen, bakes, a little shout out there, of companies reporting this week. We already heard from Uber. We already heard from Disney. We hear tomorrow from Amazon, Elf, and Peloton in the morning. That's going to be a busy day for me, but I just kind of chose these guys because in terms of stocks that you're going to see possibly popping between this group and Elf, you've got two opportunities just to lever there.
So one of the things I'm always concerned about with a new CEO that you're hearing for the first time is that they kitchen sink it. If they kitchen sink it, do you think there's still a good chance that the stock works? Because people are expecting that. That's sort of the thing. And also, I just pulled up the estimates for next year, and I'm not sure if these are accurate, so don't hold me to it, but they have for 25 and 26 them still losing money. Is it your expectation that no, that's going to turn positive, and that there's a chance that he talks about that?
I'm less concerned about whether they're losing money on the bottom line than I'm concerned with just the straight out cash flow situation. I think I'm less concerned with the CEO here coming up with something new, because they had a really nice interstitial between the last CEO, who was still clinging to the idea that this could be a growth story and spending money accordingly. We mentioned the R&D. A lot of production ideas were there, just on the assumption you were going to sell kind of an ever growing, 10% or give or take more bikes every single year. They've given up on that idea. The temporary CEO, which remembers the board, they came in and did a terrific job. More savings than were expected, better cash flow than was expected, and so he really has. I don't expect him to clear the deck. I don't expect him to come in there lower expectations. Expectations are pretty damn low already. They're talking about kind of negative growth on the churn side, and it's really just a controlling expenses type of story with some cautious marketing. They're well aware that this is a premium brand, and you have to market a little bit, but there's a reason you don't need to see Ferrari ads every 10 seconds when you're watching golf. They just don't need to advertise. It's if you want to exercise at home, these guys are the connected fitness market. To the extent that still exists, I believe it does exist. David, you like to go to Lifetime Fitness. I don't like being looked at while I'm all sweaty. So I would much rather work out at
I'm
home.
not saying that. I'm not saying that I like that. I'm not saying I like that, but
I'm not
no, I
passing
agree.
judgment on whether you do or not. Some people like that. I don't. You go rice under me when I'm riding my Peloton. Things get a little sweaty. They get a little ugly. That means I'm having a good ride. I don't like to share that experience. Hey, aren't you the guy from Fast Money? Puking, gagging and
No,
stuff. That's
I
not an
agree though.
experience I like. So I want to work out at home.
And the reason that I think bringing up that, look, Kevin and I are still paying for it. One of the reasons
Right.
that we do is, or at least I do, is that on the occasion you want to do it, having it there is super helpful. And the app is amazing because you can pretty much do meditation or yoga or strength training or whatever. So, in fact, I would buy another one if they started back up the trade-in that they used to have. They don't do that anymore, but that was a great deal. Trade it in, get a couple $100 off the new one.
Yeah, they can get creative in a lot of different ways. They've worked through a ton of inventory. They built bikes and somehow managed to spend $420 million, which is just as stoned an idea as it seemed like at the time, on Precor, and they still can't make their own bike. So this is not an efficiently run organization. But you're right, the app is really sticky. The app is a great way to measure your workouts. They need to tap into sort of that exercise ring type of habit for people, where it's you're clicking things off, and did you get your workout in today? Well, I rode, I biked, I did whatever it is. Peloton's kind of covering a lot of different disciplines that you can work out with, and just becoming part of people's lives. And the more they can do that, the steadier their cash flows come, because as you guys say, it's hard to really quit. It feels like a concession to quit. It's a very sticky product for a ton of different reasons, and it's a good product. And that's good enough. Was that enough at $50 billion? Oh my God, no. That was insane. There is no exercise bike good enough to be worth what this thing was valued at 5 years ago. But then again, we've a lot of water under the bridge since then. A lot of sweat being wicked away from the underlings of these bikes, and I just think it's time right now. Now, this isn't an idea that might work tomorrow. I added some shares yesterday. I don't necessarily expect it to work tomorrow, but I expect by the end of this year we're going to be talking about a much higher stock price.
Kevin, when you look at the chart, when you look at the chart, is there anything on there that says like you're overly concerned, or that you think it's really positive? And what do you see?
No, and I was just asking Jeff, any shorts left in this, or are they all exhausted?
They've been pretty beaten to a fairly well. You might have had some people come in when it got up to 10. That was clearly kind of an exaggerated move from a base of 288 there was the low. And so we got a huge run. We had Einhorn talk about it at a conference, and people are like, oh, crap, Peloton still exists.
Okay, I remember this.
Yep, and that nuked a lot of shorts. It's not about it, right now. What's that?
Einhorn talked about it, right?
Einhorn talked about it. Yep.
Okay.
And so it's at a $280 million or billion-odd dollar market cap, $722 million cash. They're not going bankrupt. and so there's not a ton of chicken on the bone if you're going to be shorted. I would like to have a bigger short base. There's always a short base in this because there's people that just insist it's a coat hanger and they don't see any value on it. They're wrong. So that's fine. I would love them to pile in. I wish there were more shorts. And if people want to take the other side of me, knock yourselves out. And we'll see how that works out.
Yeah, I drew this line here at the 1090 high, which goes back to 2 years, and the longer the resistance is in the past, the weaker it is, and so you had these at least two big volume days, or these are weeks, two big volume weeks that really turned the trend around. This to me is just a logical consolidation, and it makes sense. Yeah, let's see what the earnings report is, and we'll learn a lot tomorrow. If you're above 1090, you're going north, in my opinion.
Yeah, I think so too. And we get to know this guy, getting to know new executives. They make a big difference at these companies. These kind of turnaround stories. He's got a nice pedigree. He's getting a lot of stock, which is a little bit dilutive. But again, this company could settle into a pretty solid, less of a turnaround story than a turnaround thing that's actually happening, which takes me from narrative to a nice financial condition, which is, again, what the essence of this game is.
Where's he from?
He came from Disney, and he's just kind of been a jack of all trades. He's got 20 years experience in related industries, and so he's been around.
Awesome.
Now you mentioned Amazon reports soon. Anything there that you say, like with the tariff, is it now until the tariff thing is figured out that it's a tariff trade, or no, they could put up a big number and people will still care?
Amazon kicks just so much butt that it's absolutely appalling. I'm always marveling as a retail guy that this is going to be the biggest retailer in the world in the next couple of years, and they kind of don't care all that much about retail. It's very telling that Amazon went from just a bookstore in Jeff Bezos's garage, apparently, to a company that accidentally killed FedEx and UPS. Oops. Geez, did we cause a 20% decline in UPS? I mean, holy crap, this was the world's largest online bookseller. There's so many different moving parts in what Amazon's doing right now that retail is just really one of the smaller parts of their flywheel. If people are selling this on tariff concerns, a lot of Amazon's people that are undercutting them are really much more based on that. The Temu crowd is going to be hit much more by that than the Amazon is. Amazon's not really trying to be the lowest price seller. They're trying to blow your ears back, just by, you order something, you get same day. They don't even promise same day. That's just bonkers in terms of how good that distribution is and how excellent this company is at so many things.
I can't tell you. Yesterday I ordered 2 days ago, I ordered an internal hard drive, and they said, "Do you want it by 4 a.m.?" That was the same day. That was at 7 o'clock at night. I was like, "No, I'm good. You can do it midday tomorrow. I'm not planning to install that that early." But
and just how good is that? I mean, how they're part of the Costco, Walmart, and Amazon, just sort of threesome there, that triumvirate that is just crushing other retail, and it's hard to see in the near term how someone takes them out because they're just able to lever it in so many different ways. Amazon spent 5-6 years just dedicating themselves to second day delivery, third day delivery, spent billions and billions in locations and trucks and everything else. It seemed like a little bit of a quixotic journey for them to be spending that much money. And yet here we are. As you say, it's like, I ordered the batteries or whatever it is you're getting, and it showed up today. That's really hard.
And by the way, what are you going to really price shop? Are you really going to care if it's $10 cheaper? You're buying a $200 internal hard drive. It's $10 more, less expensive at Best Buy. They can't deliver it for a week, or you have to pick it up in their store 4 days from now. Again, if it's something you can wait for, I totally would do that. But if you need it for, so I mean.
Here's something dark that you can look at if you want a good negative story on Amazon, or at least something that's a little, this is odd and kind of government related. Their third-party seller line is one of the fastest growing, just a marvel in retail. It's bigger than Target. It's about $150 billion a year run rate. That's the stuff where they just sell stuff for other retailers. That's the side of the business that third parties come in, and Amazon's just doing that distribution for them. It's the aspect of the business that killed the FedEx and the UPS of the world, because they don't need them because they're doing it on trucks on the same day. Now that's going to grow probably 19-20% for the quarter. It continues to grow at that rate at $150 billion, which is bonkers. But the amazing thing about it is that they actually are forced. They force those third party sellers to price competitively, and so you have what is kind of a sketchy source of goods. They don't. It's hard to really check where someone got a lot of these different products that fly through in the stores you've never heard of that sell through Amazon. It's completely unregulated, really, for all intents and purposes, and is kind of a fencing operation if you look at it from afar. So it helps. If you want a reason why Jeff Bezos would show up with Mrs. Soon to be Bezos sitting behind the president, it's because maybe that would help not get these aspects of the Amazon business looked at all that carefully. So, again, it's a fun company.
A very unrelated question, but I've seen on social media a bit some people posting, video from their Walmart store, their local Walmart store, saying, "Look how empty it is. People are afraid to. Illegal immigrants are afraid to come in because they're afraid ICE will arrest them." Are you hearing anything like that, or is that just some clickbait?
Clickbait for sure. I mean, that's just not how that rolls. You can walk through a store and I can show you anything. I take pictures of every store I go into just because I'm a weirdo that way. It depends. It depends entirely on when you walk into a store. If you want to see an empty Walmart and then kind of create a story where I went into this Walmart, this was noon on a Saturday. Sure it was, and it was just empty because there's no one in there. It's people really, really super duper like bargains. And they like shopping at Walmart. The store base is much improved. Another company that is managed to create a flywheel away from just being a discount store, and that's a huge deal. Advertising is going to be a big deal for them. AI really matters for them in terms of replacing their goods and also just managing their stores. They're again being able to scale the way Costco, Walmart, and Amazon have, because they have such huge amounts of cash flow to compare to the Targets of the world, is just giving them a moat that is really hard to swim through if you're the other companies.
Hey, Jeff.
So,
yeah.
I just want to give kudos. It isn't often that I hear a three-legged dog and quixotic in the same interview. So that's right. Your intellectual breadth is really showing today.
I like a big.
So let's go from taking the trip on the Peloton station.
No. I got something. What's the risk that Amazon is Google too, where all this retail stuff no one cares about? It looks like a heavy stock that people are hiding out in as NVIDIA takes on water. And they say something, if AWS has any blemish on it, they do a Google to Amazon tomorrow.
Entirely possible. And if that gets back down to 200, I'm loading up the truck.
Right.
We saw that nice breakout at 200 there. It went back and revisited Bezos and the ex-Mrs. Bezos, who didn't get to go to the White House event. They were also both selling just billions of dollars of stock at that 200 area. Once we cleared that gave us a really nice little area of support there, at least as I see it. Amazon has spent a lot of time consolidating, same way Walmart did for years. And suddenly I looked at my books just yesterday and I was amazed at the gains that I've seen on that, because these stocks just they consolidate for quite a while no one's really surprised. They get cheap and then they spring. I don't see Amazon pulling back a huge amount. I think that would be a gift just because it's a huge bet against the consumer to regard Amazon as being in a ton of trouble when they're diversifying in so many different ways. Again, if Amazon, for instance, is not very good at stores. Remember when they bought Whole Foods and everyone said, "Oh, they're going to take over grocery." As it turns out, that was not actually a threat to the grocery industry at all, because Amazon is frankly sort of disinterested in running retail stores. And so they'll turn in like 3% growth for that. They'll turn in maybe 6, 7, 8% growth for their own goods that they sell, and 20% growth for third party, which is the fattest margin business they have. I really, really like that business model. And that's before you even get to the fact that they, are now getting into streaming. They basically can pick their shots in a way that if you're ESPN, you have to own all the basketball, right? If you're Amazon, you just say, you know what, everyone on Thanksgiving football, they're going to watch us. They're going to watch the NFL games that we put on. The entire country's going to do that. We have enough cash to buy that. And we've just made a new American tradition. Wow. Companies that can do that, that's a very rare situation to be in, and they're going to be taking advantage of that.
All right. Well, we have to move on. And plus, Kevin, you stepped all over my great segue from before, so I'm going to repeat it again. We went from trippy, hanging out on our trip on the Peloton stationary trip, to now PSIL, the psychedelics ETF. Get it? Trippy. That's what I was going for.
Nice.
It would have been funnier the first time. I know it would have killed the first time. But let's talk about the psychedelic ETF. What's going on there? What does the chart look like? And why are you taking that trip?
Wow. Yeah. Boy, what a shame that I ruined that segue. I mean, that was, oh my God.
That was magic.
Oh my God. That's like Second City kind of stuff. I wish John Candy was still around. Good God. Anyway, it's February 5th, 6th, 5th. And so every month I go through now 4,400 plus charts. By the way, up 150 in the last month. So the number of things you can express via ETFs is absolutely unbelievable. And now they include psychedelic stocks. Shroom stocks, used colloquially. I'm not going to do that because I think they've become real. I mean, I think there's enough evidence that is cropping up that for soldiers with PTSD, deep depression, etc., that psychedelics help. And now I caution that this could be. I'm not here yet, by the way. I have not pulled the trigger, but this is a pretty chart that I can see from 3 city blocks. When you go up 8% and you're down 1%, I tend to think it's real. It might be an RFK Jr. approval pop. So that might be part of it. The 10 names that make up the ETF kind of all look like this. By the way, I'm going to show you the monthly. But Alkermes is, and I share this with you, David. Alkermes is the only name I've ever used that I've ever had any experience with here. The others are oddballs. But here is what a long, strange trip it's been. Now that's a segue. Psychedelics 107. This is 107 up here, coming down to $7. While I don't know. I guess people thought they had to trip through COVID. I don't know, but 7. This is a real trend change, a real bounce on real volume, and I'm fascinated by it. What I do when I encounter something like this, where I frankly have almost no experience, I go to Google alerts and I put all the stocks that are in the ETF. I put the ETF itself. I put in psychedelics. I put in RFK Jr. and I just kind of see what Google alerts, which basically goes through the entire internet and says, here's what I'm seeing on psychedelics. But I'm just fascinated by it. I would love to. The knife is clearly on the floor, so we've got a nice bounce here. And stay tuned. When I pull the trigger, I'll tell, probably behind the paywall, I'll tell the members. But I am fascinated by this. This is like, get your party gown, get your pigtail down, get your heart beating, baby. This is an exciting trend change that I'm going to be paying attention to. I hope exploiting. I hope making money for all of us. So that's it.
Well, it's really interesting. We need to get the portfolio manager for the ETF. I just Googled this. He does a few different ETFs. He does the pure cannabis ETF, the pure U.S. cannabis ETF, the hotel, the Vice ETF, and the restaurant ETF, as well as the psychedelic ETF. So you got restaurants, you got Vice, you got psychedelics. He sounds like somebody that we want to hang out with.
He sounds like somebody who's writing an awful lot of fun stuff as a business expense to me. It sounds
it's research.
I'm very familiar with cannabis has had so many fits and starts. It's a joke. It basically goes from whatever legislation is cropping up or a state approves or what have you. So I'm not naive. I know exactly. You need to have real data, real approvals, real states saying this is this is good to go. I think having a blanket federal, change in scheduling is going to be really tough to do. But there's something going on here, and I am going to. So stay tuned. If it's a nothing burger, I'll tell you that. If it turns out to be something that can retrace, half or more of that 100-point swoon, then you're going to hear about it here first.
Got it. All right. Well, it does look interesting, and I agree. It's probably a RFK. It's not just the trade for it. It's that I think there is a wholesale change for people who have severe PTSD or other psychiatric things that are recalcitrant or issues. I think that it can really help people. I think the evidence is very clear. Getting it so that it's not abused or not used recreationally, that's going to be the challenge. But I think that's overcomable. But so I just wanted to mention. Can
I do one more? Unless you have a segue that you polished in your years of stand up, then okay. But this is NVIDIA, okay, and I know we're talking about this a lot, but when I first came on Wall Street Beats, I was hearing from CNBC and elsewhere, Fast Money, Jeff Mackey's alma mater. This is Cisco 2000. And so the they're going to overbuy servers like they did in 2000, and now they're going to overbuy chips, NVIDIA chips, and DeepSeek is and that was the thing. And I said no, because the valuation doesn't matter until the chart says it does. Well, now the chart says it does, and now there's a real competitive threat that's caused real technical damage that has triggered the first part of my sell discipline, which I talked about last week. Okay, this gap down here, this close below the 200-day moving average. If you own NVIDIA, then I would have sold a third. I'm not here. Okay, I have it in an index fund, but I don't have it outright. The volume, I'll just do one arrow here. The volume is doing what it does when it says, I'm going to go into weaker hands. The volume picks up on the down days. It recedes on the up days. This is a problem, and the 200-day is threatened to move down. So what we've seen with the Magnificent Seven is that the Microsofts and the NVIDIAs are getting torpedoed. Google looks like it took a torpedo today, which is why I asked the Amazon question earlier. So, and I'll be here, and I'll be very vocal about it, with members. If you need to sell the second third of NVIDIA, you're going to hear about it here first, and it's not going to come from CNBC, I don't think. But so the fundamentals and the technicals are dovetailing, and I'm very cautious on NVIDIA for the first time in, a year and a half. I'm done. Sorry.
Sounds good. No, don't be sorry. I think that's really helpful. I'm just going to be super short. I'll tell you how I made a mistake. I was warming up to Novo, and I called a friend of mine who runs a very successful pod at a multi-pod shop who does healthcare. And he's like, it's a dog. It's horrible. Don't own it. They have lots of problems. And he went through them and articulated it well. And so I decided not to. And the stock's up 5% today for probably the exact reasons that I thought. One is that it seems to me to be oversold. There might be a little bit of short covering today. They are losing the race to Lilly. There's no doubt to that. And some of the data is showing that people who switch from one drug to the other, they're all switching, or not all. It's something like 10-1 or 8-1 or even higher that are switching from Novo's drug to Lilly's drug. Lilly has better data. So I've talked about this previously, so I'm not surprised by that. But at some point you go, okay, well, what did the earnings look like and the rest? So I wasn't thinking about making a giant position. It was going to be a trade ahead of the earnings, and of course, missed out on that. Just goes to show you, it's better to own your own mistakes, listen to other people, but not to own your own mistakes. If your gut tells you to do it and you've done the work, it's good to get the information. But if it doesn't change your thesis, then just put it in your back pocket, or maybe do a much smaller position and say, you know what, that's. But he's no longer my friend. He's dead to me. Okay, no, he's a good friend. Less of a good friend now, but he's still a good friend. Lastly, on HIMSS, can't do a show without talking about Hims. Up
Oh
another
no,
4%. Up
day
another
without
4%
sunshine.
today. I did sell a piece yesterday, so I think you have to take money off the table when you're above 40, and you were 25 just a few weeks ago. I get it; the numbers are going to be great and all the rest, but if there's any blip in the numbers, or post the Super Bowl when their ad comes out and people go, "Oh, that was it." Again, great company. I didn't sell it all, but just thought I'd pass that along. Does anyone have anything else?
Hey, David, is there a difference between the mode of administration for the Lilly versus Novo drugs? Is there a differentiator there?
No, everybody's trying to get to an oral drug, and that's one of the problems that you can't really get a. There's no oral drug at this point that's a GLP-1, and so they're both injectable. They're both painless. They're subcutaneous. There will be orals at some point, but the question is, do you have to dose it up so high that the side effects become worse just to get an oral pill? Some people are terrified of needles. If anyone's watching this and is terrified of needles and is super obese and is like, oh, I would do this if weren't afraid of needles, I promise you that these needles don't hurt. You should just do it. This is again, I'm not advocating that you do it, but I wouldn't let the needle hold you back. I would let the side effects hold you back, or other things maybe hold you back, but not that. But with that, this is Wall Street Beats. If you have any questions, ping us on social media, ping us at Wall Street Beats. This is our last week of free shows. We will be behind the paywall completely. So if you like what you've been seeing, if you have any interest, what you do is just poke around on our website, wallstreetbeats.com, and sign up for your free trial. Again, thank you, everybody. Have a great week.
Thanks, folks.
Nicely done.
Jen.